And we are live from Bloomberg's world headquarters in New York. I'm Sonali Basak.
And I'm Tim Stanovic. Welcome to Bloomberg Crypto. We'll look at the people, transactions, and technology shaping the world of decentralized finance.
And it's Crypto Week in the House. In just a moment, you're going to hear from Republican Congressman Bryan Steil of Wisconsin. He's an industry ally who chairs a House subcommittee on crypto. And he says the golden age of digital assets is here.
Crypto Week helping to fuel optimism all around the crypto industry as Bitcoin sets a new record high.
And another potential sign of digital assets going mainstream. As Bloomberg News has learned, federal officials are studying whether such assets might be factored into mortgage risk assessments.
All ahead on Bloomberg Crypto over the next half hour. First, though, a check on digital assets. Seeing a little bit of red on the screen today. Can't be green every day. Bitcoin and crypto-adjacent stocks are moving lower today. Bitcoin down about 3%. IBIT down 3%. You see Marathon Holdings down about 1.5%, as is MicroStrategy. It does come just one day after these names started the week higher, and Bitcoin hit that new record, surging through $120,000 per Bitcoin. So maybe a little bit of selling to lock in some of those gains. Also, I want to point out this really interesting story here with Vanguard and index investing. Remember, Vanguard's this $10 trillion money management giant. And get this, it's now the biggest backer of Strategy, the company formerly known as MicroStrategy. Vanguard owns more than 20 million shares, nearly 8% of all of Strategy's outstanding Class A common stock. It likely took that number one spot sometime in the fourth quarter of that last year. Now, remember, it has dozens of Vanguard funds, and the dozens of Vanguard funds that hold Strategy track everything from small and mid-cap benchmarks to momentum, value, and growth gauges, among others, Sonali.
Crypto seeping into the stock market more and more. That was one big wave. This is another. This is Circle stock since the IPO. It went public at less than $31 a share, now closer to $200 a share. Absolutely soaring. This is 6 to 7 times higher. And if you look, Tim, it's fascinating. If you look at an index of companies that have gone public recently, Circle is dragging the whole index up. And now more crypto companies. We have reported Grayscale is considering an IPO, the information reporting figure as well. So a lot going on in terms of crypto companies meeting the public markets.
Yeah, wild times in crypto. Well, as digital assets go more and more mainstream, even former U.S. Commerce Secretary Wilbur Ross is in on the hype.
What's happening is you're getting away from the retail Wild West and into a more professional environment. So the world is changing. It's becoming widely accepted as an appropriate institutional class, and therefore the environment is changed.
And now in the last hour, President Trump posting on Truth Social, urging Republicans to approve crypto legislation to, quote, make America the undisputed #1 leader in digital assets. For the latest on the timing of votes through these bills, we were joined by Bloomberg Intelligence senior government analyst Nathan Dean. And earlier we had spoken to Representative Bryan Steil about the Genius Act passing the House. Where are we standing now in terms of the various pieces of crypto legislation making its way through Congress? And is Crypto Week going to get a lot done?
Yeah, so there's 3 bills that are going through the House of Representatives, but most important is the Genius Act, which is the one we talked about. And this is important for stablecoin issuers like Circle. This gives them a regulatory framework to operate. Essentially, they have to have their assets 100% backed by high-quality liquid assets, and it gives them a way to register so they can get the enforcement albatross from around their neck. But other things that are going on is the Clarity Act. This is the one that's more broader. It's also known as the Market Structure Bill. This is important for companies like Coinbase and Robinhood. Yes, it's most likely going to pass the House, but then it's going to go to the Senate, where I think it's going to sit. The Senate has their own plan, which we anticipate that they're going to release shortly. And there's a little bit more concern from the Democratic Party towards the Clarity Act. So I don't think this is going to actually pass this year. I think it's going to pass the early stages of next year.
We are starting to see, I think it's fair to say, digital assets not just becoming more mainstream, but some of the largest banks actually embracing these, at least to a certain extent. We did just learn, thanks to a headline, that Jane Fraser, the CEO of Citigroup, saying that Citigroup is exploring issuing a stable coin. Can you talk a little bit about the competitive landscape and really the value proposition for these different companies, Nathan? Like, how many stable coins do we need?
Yeah, so I think every bank at least is considering one, or at least should be considering one, from the standpoint that, look, about 6 to 9 months ago, the banks were against the Genius Act. They were saying, look, if everybody's going to put 10% of their assets into stablecoins, most likely it's going to come out of checking deposits. But now that the Genius Act is going to pass, and you're going to have companies like Circle having this ability to go forth and operationally work, banks are asking their questions, well, why shouldn't we get into the party? So I do think you're going to see a lot of banks trying to enter this realm, and you're also going to see a lot of non-banks. PayPal, for example. But under the Genius Act, banks would be registered with the Federal Reserve. Non-banks would be registered with the Office of the Comptroller of the Currency. And if you have a market capitalization of less than $10 billion, you have to go with your state regulator. So we're certainly going to see a lot of stablecoins coming out there. And then eventually, I think you are going to see some consolidation as people begin to acquiesce around the larger ones.
I want to talk about the Clarity Act as well, because the Genius Act seems like a done deal, right? It's getting there, right? But the Clarity Act, one part I find interesting is you have these large market participants. You have Robinhood looking to tokenize all sorts of things. You also have Kraken doing the same. You have Hester Peirce, SEC commissioner, saying that tokens, blockchain, they're not magical abilities, that the market participants must consider that tokenized securities are still securities. Does this break her view? Does it break with what the industry is trying to do?
Sort of. So the reason why the Clarity Act is so important is because, remember, the SEC only has authority over securities. And a lot of the crypto tokens out there, like Bitcoin, are either commodities or the industry wants them to be commodities. Therefore, they're overseen by the Commodity Futures Trading Commission, which has, in our view, a little bit less onerous types of regulations. But when it comes to tokenized securities, just remember, Commissioner Peirce said it, they're still securities, and therefore you have to follow securities law. So what the Clarity Act does is that it provides regulatory clarity. It, again, removes this idea that maybe 4 years from now, a Democratic president or a return of somebody like former SEC Chairman Gary Gensler would come in here and try and put enforcement actions on the industry, provides that type of clarity. But compliance costs are going to increase significantly. But for companies like Kraken and Robinhood and Coinbase, they'll gladly pay those tens of millions of dollars in compliance spend in order to be able to effectively move forward in a regulatory framework.
Bloomberg Intelligence Senior Government Analyst Nathan Dean, we thank you so very much for joining us and keeping on top of all the change. It's coming fast and hot. Earlier, we spoke with Congressman Bryan Steil. We've been talking about it through the show, Republican from Wisconsin and an industry ally who chairs a House subcommittee on crypto. Here's what he said about how Crypto Week is going to play out.
I think what we're going to see is 3 major pieces of legislation move across the House floor later this week. First off is the Genius Act, which already passed the Senate, which moves us forward in stablecoin. That furthers dollar dominance around the globe. The second major piece of legislation is Clarity. Clarity brings us actual regulatory certainty so that we can win the Web3 race here in the United States, protect consumers, and be in a position to outcompete other countries, and in particular China. And the third major piece of legislation is preventing a central bank digital currency from being developed and forced upon the American people. These 3 pieces of legislation, I think, will all pass the House floor and make sure that the United States is the world leader in the Web3 race.
Congressman, I kind of want to take a step back. We'll talk about these pieces of legislation in detail in just a minute. But I think even though this is Bloomberg Crypto, I think there are a lot of people out there, it's fair to say, who are not convinced about the utility when it comes to cryptocurrencies and when it comes to just legislation in this space, that it's necessary. Sell that to the American people.
I think what we should do is step back and look at how the United States won the Web 2 race. In many ways, we're all benefited in the United States of America because large tech companies are domiciled here in the United States. It doesn't mean I love all aspects of big tech, but we're definitely benefited by having those companies domiciled in the United States. As we look out and see the coming of Web 3, really with a fundamental principle in blockchain technology, we need to make sure that we have the rules of the road here as this new technology is coming online. Further, what we're currently operating in is not no regulation. What we're currently operating in is poor regulation designed for a previous era. And so what we saw with Chairman Gensler as chair of the SEC under the Biden administration was regulatory action and enforcement actions that were driving forward policy. This is our opportunity to have a clean start, to say, let's make sure that we're regulating this for the era of Web3 to force and to encourage the development of Web3 technology here in the United States. Lack of new legislation will continue the results of what we saw during the Chairman Gensler's time at the SEC, which was enforcement actions in an incredibly unproductive manner.
Representative Steil, one big question about the stablecoin bill, in particular the Genius Act. We spoke recently to Treasury Secretary Scott Bessent, who highlighted the ability of stablecoins to be large buyers of U.S. Treasuries. And while on the positive end of that spectrum, that would mean you have another buyer of U.S. Treasuries while the U.S. debt load is as large as it is. The risk here is that the stablecoin industry, critics would say, could become too big to fail. How do you protect that industry from becoming so large that it could require a bailout someday?
I think actually the regulatory framework will actually reduce and prevent that risk. Why? Because currently stablecoins are growing, but in an unregulated manner. And so we already see them as one of the largest purchasers of U.S. Treasuries. What the Genius Act does is puts in place a regulatory framework that makes sure that we have additional transparency as it relates to the audit and make sure that they're governed and regulated under U.S. laws. And so what I think we'll actually see is the opposite of the risk that you just proposed, which is if we don't regulate in this space, what we have is the risk that you would have some sort of significant financial challenge. What we're doing is putting regulations in place to try to limit and prevent future risk.
Congressman, let's talk conflicts of interest and what these bills do in order to prevent conflicts of interest, not just in the executive branch, but also with members of Congress. What would you say to critics who say, wait a second, we're seeing a lot of people in Washington get wealthy when it comes to crypto? How do we make sure that there are no conflicts of interest here?
This bill does put in place a new conflict of interest regulation on federal executive workers. But what this bill really does is put in place a regulatory framework across the board that protects consumers and puts the United States in a position of leadership in the crypto space and the Web3 technology. And so there's always conversations on Capitol Hill about ways that we can improve the ethics framework here on Capitol Hill. I'm involved in that conversation. I think we could do more as it relates to members of Congress. This legislation, though, is focused on putting in place a regulatory framework that will ultimately protect consumers and make sure that the United States is the world leader in the crypto and Web3 race.
Our own Bloomberg News team reporting last week that Donald Trump's personal net worth has remained relatively unchanged since retaking the White House, but the makeup of that net worth has changed. Licensing deals and crypto ventures have added at least $620 million to his fortune in recent months. Are there any conflicts of interest there?
Well, I think you see as a president that's engaged in this space. I think that stands in stark contrast to when President Biden was in the White House and Gary Gensler was engaged in enforcement actions against the crypto industry. And so the president is making his own decisions in that regard. This legislation is focused on a broader regulatory framework to make sure, again, that we're protecting consumers and allowing the United States to win the Web3 race. And so a lot of people, obviously, on the left are making all sorts of arguments as it relates to President Trump. What we're focused in is on the underlying policy, and that's focused specifically on the regulatory framework of the broader crypto industry, Web3, blockchain technology, in making sure that we're winning this race.
Our thanks to Congressman Bryan Steil, Republican from Wisconsin. Well, coming up, we're going to be joined by the U.S. CEO of OKX. It's the world's second largest crypto exchange as it re-enters the U.S. and makes deals with stablecoin companies such as Circle. And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
I think this is a highly runnable problem, and that's not guesswork. That's empirical based on what I just described. Suppose you start having a run on 2 or 3 or 4 or 10 of these stable coins, and there's hundreds out there. What if it cascades to many, many more than that? What you might then see, this gets to your question, is that these companies, in order to make good on their linking to the dollar, would have to sell massive amounts of U.S. treasuries.
Well, that was former White House Council of Economic Advisors Chair Jared Bernstein, who's been a fierce critic of crypto and stablecoins. And that brings us to OKX US CEO Roshan Robert. His exchange has more than 60 million customers worldwide. It's making a push into the US, and it recently made stablecoin deals with Circle and Paxos. We'll talk about the stablecoin deals in just a minute. I want to start big picture, though. Sort of a re-entry into the US earlier this year. Based in Malta, a lot of customers in Europe, in Asia, around the world, not as many here in the US. Give us some numbers. How's the re-entry into the US going so far?
It's been great. We announced our entry into the US in April of this year, and we've continued to build out here in the US across 49 states. We are not yet licensed in New York as yet, but we continue to build products and services across the spot exchange that just opened in the US.
It's funny that New York is not on limits to you right now, considering you're in New York and this is where you are based. When do you see that happening? When will you get licensed in New York?
Well, we have to go through the licensing process in New York, which is something that we are considering in the long run. As far as the US is concerned, we have declared that we have an office in San Jose, which is our US headquarters. We also have a small office in San Francisco. So the bulk of our team works out of San Jose and San Francisco. We have nearly 500 employees in the US, and they're mostly out of the West Coast.
Now, I want to ask about some parts of the crypto market that are probably less talked about. You know, prediction markets, particularly in the United States, have really taken off since the election, particularly. But we also reported today at Bloomberg News that the probe from the DOJ regarding Polymarket has ended. Now, of course, there were a lot of enforcement actions that were brought on for different parts of the crypto industry last year and a lot of investigations, but this one in particular, I'm wondering how the crypto community plans to integrate more probability outcomes, more betting outcomes into the strategies that they offer. Is it something you're thinking about?
Absolutely. When we've entered the U.S. with an idea that there are a number of different prongs that we should look at, right? There are a few opportunity sets in the U.S. First, of course, is the ever-expanding spot market with an ever-expanding number of products within the spot market, and we are focused on that at the outset right now. As this market grows, there is, of course, the derivatives market to focus on. That's another opportunity set that over time that we want to really concentrate on. You just mentioned in a previous segment about RWAs. That is a huge segment that is growing as well, right? I know I haven't touched upon Polymarkets or the prediction markets, but in a sense, when you look at RWAs and when you look at the expansion of that market, going from 15 billion end of 2024 to nearly becoming a $25 billion market by June of this year. So that is a market that is expanding a lot. And then, of course, there is this intersection between stablecoins and payments. That's an area that we want to focus on. So there's a lot of things that we want to sort of really look at, and we're going to focus on these 4 prongs first.
Another area that has clearly taken off is tokenization, both new tokens that are forming because of this vacuum that has existed in lawmaking for so long in the United States, particularly after President Trump won the election. Do you worry here that listing standards are going to go down? At least at OKX, we have a strong focus on listing. We have an established process that goes through legal reviews, compliance reviews, risk reviews, security reviews. So there's a whole lot of process and procedures involved in the listing process. So I'm pretty comfortable that the standards that we have will keep us in good stead. Roshan Robert, CEO of OKX US. We thank you for joining us here. Of course, a lot of people changing their business plans around these new rules of engagement in crypto. And coming up next, speaking of rules of engagement, how crypto is emerging as an asset in the housing market. This has been long awaited. We're going to talk about how it's actually working next. This is Bloomberg. The U.S. government has directed Fannie Mae and Freddie Mac to study whether digital assets might someday be factored into mortgage risk assessments. It's a move that would bring crypto to the mainstream, closer to the mainstream from the fringes of finance. For more, let's bring in our reporter covering the story, Bloomberg cross-asset reporter Isabelle Lee. And none of this would really be completely possible without the support of FHFA director, as we've been saying, Bill Pulte, who is very attuned to this asset class.
Very online also.
Very
He has
online.
been very online for years.
But here's where I'm the most curious. You don't have banks getting comfortable yet with crypto. If Fannie Mae and Freddie Mac do get more comfortable with it, does it kind of solve the problems in the industry of getting comfortable with it for mortgages?
On that very online, he did announce this directive on Twitter and uploaded a screenshot of the note, and that's what got a lot of industry folks unsettled a little bit, because for them, usually big announcements like these involve roundtable discussions, involve you talk to key stakeholders, it involves months of discussing, but then here we are, he just posted it on X, and of course, it got a lot of crypto bros and enthusiasts excited.
Wait, let's identify the problem here. If you have made a lot of money with crypto, at least on paper, you go out and you try to get a loan, the bank doesn't necessarily count that crypto wealth toward approving you for a mortgage, right?
Because, yes, and what he's saying is when it comes to crypto mortgage assessment, he wants Bitcoin and all your assets to be included. Because, for example, if you're a Bitcoin billionaire, but you just have a little in fiat currency or dollars, then no one will care that you're a Bitcoin billionaire. So this is just really that, counting it as part of the risk assessments. And you both would know, if you're a mortgage, if you have a mortgage, that usually it's really your income and the house as your collateral that are the primary drivers, but assets also play a role, although quite secondary, your savings, your 401k, and so that's what they want to prove. And for Bitcoin holders, they're happy because they don't have to liquidate their holdings to put in a down payment or to prove that they have the cash.
It's interesting, you have Bill Pulte really also looking at the traditional way credit scoring works, FICO versus Vantage 4.0. The question to me is, when does a traditional lender say, I'm gonna take your Bitcoin and lend against it?
Isabelle?
That is a big question, and we actually have startups like that. Milo, for instance, it's a Miami-based startup. From start to finish, it does that. But then in the traditional space, we still don't have it. And a lot of questions remain because Bitcoin is so volatile. In a month, it can move 40% on the upside or the downside. So how will that go?
Yeah, Isabelle Lee from Bloomberg News. Check out her story and more on the terminal and at Bloomberg.com. That is going to do it for Bloomberg Crypto. Join us again next week. It'll be the same time, same place.
But
the question I have... Oh, after Crypto Week, yeah. We'll see if we'll get another new all-time high for Bitcoin.
Yeah, especially, are they going to pass these bills? Are we going to get rules of the road? Tim, looking forward to doing it with you all again. Same time, same place next week. This is Bloomberg.